So in this video, I'm going to be teaching you the set and forget strategy. And this is the strategy you need to take your Forex career into the best possible place it can be before 2024 runs out and even up to 2025. Now, just to be clear, this is the strategy that Fxalexg himself used to take $100 into $1 million. So, ladies and gentlemen, without further ado, let's jump straight into it. I'm not here to waste your time. I'm here for the real deal. Now, the set and forget strategy has many denominations, one of them being the top-down analysis, another one of them being price action, and then another one of them being area of interest. So this is GBP USD, and like I said, first things first, the top-down analysis. Now, doing the top-down analysis, what is a top-down analysis? A top-down analysis is going on to a higher time frame and looking at the direction of the market, and then you go to a lower time frame and you keep on going to lower time frames and time frames just to understand the overall view of the market. Let me give an example. A person who is in a ground floor of a building does not really understand the topography of a city. A person who is in the first floor of a building can see the topography of a city more than a person who is in the ground floor. And a person who is in a fourth floor of a building can see the topography of that city better than a person who is in the first floor. And then a person who is in the 20th floor of the building can literally see the whole city compared to a person who is in the fourth floor. And then maybe if the building is so tall that the person can climb as much as the 100th floor, that guy that climbs the 100th floor can literally see the whole city and literally the whole world compared to a person who is in the 20th floor. So that is the top-down analysis. Personally, I start from the monthly time frame. Now, if you notice, the construction of the 4 hours is different from the construction of the monthly time frame. You see, the monthly time frame looks a little bit different. Now, look at how the monthly time frame is looking. It looks like a totally different pair, but it is still GBP USD. You can see. But it looks like a totally different pair. So from the monthly time frame, you can see it starts from 1971. From the monthly time frame, we're going to stretch this out. So you have to identify the direction of the market even from the monthly time frame. Now, from the monthly time frame, is the market bullish or bearish? The market is clearly bearish from the monthly time frame. Now, how to identify a bearish market is it does lower lows and lower highs. So this is a lower high. This is not, look, if the market does this, it's not a lower low. This is an equal low. And now most times if the market does this and does something like this, it is most likely that the market is about to change direction, but we could not be sure because the market can still come down, or maybe at this point, it now does something like this. This is now a higher low, but don't worry, that's not what we're talking about. So we're talking about lower lows and lower highs. So this is a low. This is a lower high. This is a lower low. So it means that this low is lower than this previous low. So this is a lower high and this is a lower low. So by this, you can say that the market is on a downtrend. It is on a bearish trend. This is a clear sign that the market is going downwards. It's not going upwards, and I believe you understand. So from this market right now, GBP USD from a monthly time frame, remember this is a top-down analysis, from a monthly time frame is doing some lower lows and lower highs. You can see lower lows and lower highs. It comes to this area. Now this is where it does, like I said, an equal low. Look at this low and this low are literally equal, an equal low. Then it comes here. Now it does a little higher low, but that's not what we're talking about. Now it comes down here and so on and so forth. The market now is most likely still going to the downside, but don't worry, that's not what we're here for. So as we have seen, the monthly time frame is on a down, it's on a bearish trend. Now, once we're done with the monthly time frame, we're now going to move down to a weekly time frame. So now remember the example I gave about the building. The monthly time frame is like the 100th floor. Now the weekly time frame, we've come down to the 70th floor. So from the weekly time frame, we want to see how the markets are moving. Now, another thing you should know is that sometimes one time frame could be different from another time frame. The markets could be bearish on the monthly time frame, and if you check the 4 hours time frame, it's bullish. Yeah, it happens. On a weekly time frame, the market is kind of bearish. You can see it's bearish here. It is bearish. But now there's something you need to be careful about. You know, you can see these numbers here. This is the price. Now, you need to be careful about something. This is the price and this is the time. A whole lot of people can just jump into a weekly time frame and say, oh, it's bearish or it's consolidating. Because if you zoom out a little bit, if you zoom out, the market looks like it's consolidating. It doesn't look like it's bearish. You can see it looks like it's just going up and down. You can see up, down, up, down, up, down, up, down. It's going up and down, up and down, up and down. So the market doesn't really look like it is bearish. So when you stretch it out, you now understand that, hey, the market is actually bearish. So be careful with the price. Learn how to stretch in and stretch out the price. Don't overstretch it. Let it be somewhere in the middle. So you're not going to think the market is consolidating when the market is actually bearish. So as we've seen, and that thing, you know, if you overstretch this, is going to look very, very, very bearish. So just be careful. Let it be somewhere in the middle. Ouch. I'm going to put that in there. So we now know that the market is bearish on a weekly time frame. Like you can see the higher lows and higher highs and so on and so forth. So if we now go down to a daily time frame, remember this is the top down analysis. Now look at what I said. We just clicked the daily time frame and the price now looks like it's consolidating, but we don't know, so we have to stretch it in. Now from the daily time frame, what is the market doing? If you think the market is bearish, you're wrong. The market is actually bullish on a daily time frame. Now remember, what the monthly time frame was bearish, the weekly was bearish, now the daily is bullish. That's to tell you that inside there is a trend in a trend. You understand? There is a trend in a trend. Now, just in case you do not understand what that means, let me explain. A trend in a trend is, let's say, for example, a daily time frame or a monthly time frame on a downtrend could do something like this: lower lows and lower highs. Let's say it comes up a little bit and goes back down and comes to this area and comes here and consolidates, then it goes back down again. And this could be how the market is misbehaving. You know, this could be how the market is on a month. Let's say this is a monthly time frame, and then if you now zoom into a daily time frame, this trend could now be something like this. It could do something like, it comes down here and does things like this. It comes up and comes up again and comes up again and comes, okay, from here, let's say it goes back down and it comes up again and comes up. So it does this and then it goes back down again and it keeps on doing that and so on and so forth, and then it goes back down. So this is an example of a trend. Now this and this are literally the exact same thing, but this is more like a monthly time frame and this is more like a weekly time frame, or let's say a daily time frame, but let's stick with the weekly time frame. So now this is, you can say this is a downtrend. This could be how the weekly is going, but if you zoom into this area, it could now look like it is on an uptrend. Now, as a beginner trader may say something like this: maybe because the market is somewhere here, the market is on an uptrend. No, it's not on an uptrend. It's just trying to take out some stop losses. It's trying to hunt some stop losses. So you should be careful when you're inside this region. You should be careful when you're trading in an internal structure, because internal trades, a whole lot of times you could make a whole lot of mistakes when you're doing some internal trades. Internal trades, you need to be careful when you're having an internal trade. Now, someone could think something like this: the market is on an uptrend, forgetting that in the overall direction of the market, it is actually in a downtrend. So this is why you need to do the top-down analysis to actually see how the market is going. So someone that says this is an uptrend, yes, it's an uptrend, but I mean, if you want to place a buy here and you think it's going to come so high, my dear, you're going to lose. You are really going to lose, because the market is still going to go to the downside. So you need to be careful. So that is why sometimes the monthly time frame could be bearish and the weekly time frame could be bullish, or the monthly time frame could be bearish and the daily time frame could be bullish. So coming back down to the daily time frame. Now remember, the monthly and the weekly were bearish, but now the daily is looking bullish. Now, like I said, there is something called internal structure, a trade or a trend in a trend. Listen, let me show you something. This whole area right here, this whole area, if you mark it out and just let's zoom out and let's see how small it is. Then if you zoom out, you see how small it is. Now, for those of you that know, the market does lower lows and lower highs. So this is a low, and this is a lower high, and this is a lower low, and let's say this is a lower high, and then this is a lower low, and then this is a lower high. What's the next thing you think the market is going to do? It's obviously going to go back to the downside. And these are things you need to understand. It's obviously still going to most likely stretch to the downside because it's still doing lower lows and lower highs. So maybe the market is done going up. Maybe the market is actually about to go down right now. So this is why you need to always do a top-down analysis to see the overall direction of the market. The daily, it looks like it's on an uptrend, but let's still stick with it. It looks like it's on an uptrend, but seems like this uptrend is over because this market, as on a weekly, looks like this. It's now going to still go down most likely. From the analysis on the daily, we don't really need to do much. There's a high, there's a higher low, higher high, higher low, higher high, higher low, and high. Now you may think maybe the market is going to keep on doing this forever and ever. No, it's not going to keep on doing this because at some point it's going to go down. It's going to go really, really down. So you need to be careful. But we have seen that on the daily time frame, the market is bearish. Sorry, it's bullish, not bearish. Now we could now go down to the 4 hours time frame. And from the 4 hours time frame, yeah, the market is actually clearly bullish on the 4 hours time frame. You can see there's a higher high, higher low, higher high, higher low, higher high, higher low, and then this is where the magic happens. Now remember I told you in the weekly time frame overall is on a downtrend. Look at this. This is where the price of the market is, and now it has broken below this low. So the market is no longer doing higher highs and higher low. This is actually about to go to the downside. Most likely it's about to go to the downside, but we're still not sure. And we can now keep on going down and down. This is still the 4 hours time frame. We can keep on going down and down and down and down to see more. But we're going to stop here for the top-down analysis. Now, the next thing we're going to jump into is learn to mark out your sensitive points or your area of interest. Sometimes some people could call it your key levels. SMC traders could call it bank levels, or I don't know what they call it in their SMC. But learn to mark out your sensitive points or your key levels. Now, what are the key levels? Key levels are points where the market does major reversals. Those are key levels. Now, I'm not going to tell you to start marking out key levels in the monthly time frame. You can mark out key levels. Start with the daily time frame. Marking out key levels on the weekly time frame, it's not really necessary. I don't really do it, but I start marking out key levels from the daily time frame. So this is a key level because we can see that the market had one retracement here, had another one here, it had another one here. We can see there's another one here, there's another one here, and we have here and here. So this area, sorry, let me get this. This area from here down is respected by the markets. So Alex would always say something like, if we're above, we're buying, and if we're under, we're selling. So this is one key level. Now, another key level you can mark out, I don't know, just keep on spotting the key levels. So this is another key level in which you can mark out. And then another key level that you can still see is right here. So this is the third key level. And there are other minor key levels that we can mark out, but we're going to mark them out when we go to the lower time frames. So you can see this line in which we have here, the market came here and went down. It came above and came back to this level. You can see the market is always touching this area. It touched it here, it touched it here, it touched it here, it came back, touched it here. Here, it spent a really long time here. So this is a respected area. It's a key level. Also here, you can see, if we drag this out a little bit, Here we can see it touched it here, it touched it here, it touched it here, it touched it here again, it touched it here above, then it touched it here again below. So this is a well-respected key level. That is one thing in which you need to know. So then if we now go to the lower time frame, the 4 hours time frame, we can now mark out some other key levels, some smaller key levels in which we can see in the 4 hours time frame. Now, the 4 hours time frame does not really have so much key levels like the daily time frame, but one key level in which we have in the 4 hours time frame that we can mark out, we can see here is a key level. I don't know if you saw that, but this is a key level. Now, how is this a key level? You see, the market came here, it touched this place, it went back down, it broke it above, and it came back down here to touch it, and now it is here again. So this is a key level. Now, let us blend key levels with higher highs and higher lows. Now, look at the market was doing some highs. It came to this key level, it respected it, it went back down. It came to this key level, it broke above a little bit. It came back in between the key level and it was dancing. Then it came back above to this other key level. It touched it and it respected it and it came back down to this other key level. And now it broke above. So you see the pattern. It's a higher high and a higher low pattern. Then you can see it here. It broke above. Oh, sorry. Sorry, let me delete this and do that again. 1, 2, 3, 4, 5, 6. Then it broke above. Then it came back here to touch. And now it came to this upper level. Now, listen. If the market had done something like this, it came back to this level and then it went to the upside, we would have said the market is on an uptrend. So as it has gone here, the next level, as it is here, the next level we're expecting it is to come back to this key level and then go back to the upside. That is if it is continually on an uptrend. But remember what I talked about, the overall direction of the market. The overall direction of the market is bearish. So this is an eternal or internal trend. This is an I don't know why I'm calling it eternal. This is an internal trend, that this is an internal bearish move. It is not an overall move. It is just internal. It is just in, like I said, the 100th floor, the 70th floor, the 50th floor, the 20th floor. So this is just one of those floors. So this is an internal move. And now, as you can see, this internal move, remember I said if it was still on an uptrend, you would have done something like this. But it did not do that. So look at what the market did. It now came to this low. So it has broken beneath this previous low. So this is where the market, and I can tell you from my predictions, what the market is going to do is come back to this level, retest, and go to this level. That's what the market is going to do. And it's going to keep on going to the downside. Believe me, it's going to be doing lower lows and lower highs, and it's just going to be going to the downside. Why? Because it has done a shift of structure. This is what is called a shift of structure. And a shift of structure happens when the market is about to change direction. Now, there is something, for those of you who study price actions, or no, sorry, not price actions, chart patterns, there's something called a head and shoulder. So this is not a head and shoulder literally looks like this. So this is the left shoulder, and then this is the head, then it comes back down here again, and then this is the right shoulder, and then you can see this is the neckline 1 of the head and shoulder, and then this is the neckline 2 of the head and shoulder. Do you understand? So this is the neckline 1 of the head and shoulder, and this then is the neckline 2 of the head and shoulder. So that's how the head and shoulder pattern happens. This is what the market was about to, although it didn't do it perfectly. You know, the market is never perfect. So you can see this is the left shoulder, this is the head, then now this is the right shoulder, in which it could, who knows, it could still retrace above here to come to the downside and then retest, and it starts going to the downside. Now you can see this trend now is over. Now it has started doing lower lows and lower highs again. That is why it is good to do a top-down analysis, because you see the overall direction of the market. So who knows, from here the trade could come back to this level and go back down. So it's going to do a head and shoulder. And my dear, from the 4 hours time frame, it is even going to the downside. Now we're done with we're done with top-down analysis and we're done with marking out our sensitive points. Now we can now look for areas of interest, which is still in sensitive points. Now the areas of interest, like I said, is right here. What we're going to be expecting the market to do is we're going to most likely expect the market, because of this head and shoulder pattern, maybe it could pull up to maybe somewhere like this level and then go to the downside. That is option 1. Or this market could pull up to this level and then go to the downside. That is option 2. So these are the 2 things that the market is going to do. So whenever you see this video, just look out for sells for GBP USD. Just look out for sells for GBP USD. Now we're done with GBP USD from the little analysis. Now from what we have learned, let us see if we can take this to a different pair and let's see if we can analyze it too similarly. So this is USDJPY. Now for USDJPY, like I said, from the exact same thing we've learned, let us do the exact same analysis. So we're going to now go to a monthly time frame and look at the overall direction. Now, from the monthly time frame in USDJPY, from the monthly time frame, the market is bearish, but remember when I talked about a head and shoulder, it looks like the market is about to do this head and shoulder thing, even on a monthly time frame. Like, look at this. So this is the head, this is the left shoulder, and maybe it's going to still come down here and then start going to the upside. Now, from the monthly time frame, the market is bearish rather, but it is about to swap into being bullish. Now, from what we have seen, most likely, let's see how the weekly time frame will be. The weekly time frame is clearly bullish. We have seen the weekly time frame is so the monthly time frame is kind of bearish, but it's about to change to bullish. But the weekly time frame is bullish. You don't need to look too much. I mean, it is clear. Higher highs and higher lows, higher highs and higher lows. So the weekly time frame is clearly bullish. And then if we now go to the daily time frame, the daily time frame is still bullish. Now this is where we now do the second thing I talked about, in which we're going to mark out our sensitive point. So like I said, I like marking out the sensitive points from the daily time frame. So this is one sensitive point. The market came here multiple times and respected it. You yourself start looking for sensitive points. This is another sensitive point. The market came here several times and respected it. I would always suggest mark out at least 3 sensitive points, and then this is at least 3 sensitive points. So this is the 3rd sensitive point here. At least 3 of them. You can still mark out the 4th one. We can mark out here, but let's just stick to that for now. So this is like the main sensitive points on the daily time frame. Now the market obviously is bullish. Higher highs and higher lows. It's climbing like a staircase, higher highs and higher lows, and on and on and on. Now, even if at some point USDJPY becomes bearish in the lower time frame, don't worry, that's not what we care about. We're looking at the overall time frame and the overall movement. So let us now see what USDJPY is doing. If we come to the 4 hours, is there any other sensitive point in which we can mark out? So we could mark out something like this. This is like a minor sensitive point in which the market has respected, but this is not really what is important. So we're going to now look for, from what we've seen, USDJPY, we're looking for buys, but we're not going to enter the trend or the trade right now for USDJPY. It does higher highs and higher lows. Now, this is one of my rules. Alex doesn't really say this. We buy low and we sell high. So the market is already high. The market is still under this level. So you don't want to go for a buy here. This is one of the stupidest things you're going to do as a trader. If you want to go for a buy, you're going to wait if the market breaks above and kind of retests to this area of interest. This is an area of interest. Then we now take it to the upside, which is this level. Then that is when we know that we're now going higher and higher and higher. Who knows? The market could just do something like this, could just come straight down, and you've lost all your money if you go for a buy right now. So we're not going to go for a buy for USD. You see how fast analysis can be. Sometimes you can still cross-check to do your analysis. So now clearly we have seen that the market on the daily time frame is on an upward movement. Now for those of you that maybe you still want to go to a 1 hour time frame and check, you want to see how the market is doing in the 1 hour time frame, it's still going up. For those of you that go even as low as the 45 minutes time frame, or maybe even the 15 minutes time frame, the market is still on an uptrend. So we're going to wait for some up movement and retest, because you can see it goes up, come down, goes up, come down, goes up, come down. So it's you still expect it to go up and come down. So this level now is an area of interest. I'm not really a 15 minutes time frame trader, so this level is an area of interest, and this is what we're expecting, or this is what we're waiting for. We're waiting for a breakout, a pullback into this area of interest, and then we can now take the trade to the upside. We can now long the position from here. Let's say this is going to be our stop loss somewhere about here, and then we can now take the trade to the upside. So this is a cool 1:4 risk. I like targeting 1:3, 1:4. So this is a cool 1:4 risk to reward. And ladies and gentlemen, this is how you win in the set and forget strategy. Do not forget to subscribe. Bye for now.